So Osisko Metals, part of our Osisko group based in Canada. We mostly focused on gold, but the metals is focused on base metal development. We created this company 3 years ago, and we're currently focused on the Point project located in Northwest Territories, Canada. Next brownfield site, which we've been working on for 3 years. We are at the PEA level and advancing the project towards feasibility and production. A few words on the zinc market. Essentially, decades-long divestment away from the resource sector, but especially in the zinc space, has led to significant global base metal or zinc metal reserve depletion. And fast forwarding to now, shift towards green, sustainable economy coupled with post-COVID infrastructure stimulus, including the recent Biden administration $1.2 trillion infrastructure package, is going to have a very positive impact on the zinc and metal demand. On that note, the USGS just last week added zinc to its critical metals list based on long-term supply risk. So we believe zinc is particularly exposed to supply deficits, which is why we're advancing the Point project, which obviously will be significantly impacted by smelter demand, especially in North America. So at this point, we issued a 2020 PEA at US $1.15 long-term zinc. That gave us an after-tax NPV of $500 million Canadian and 30% after-tax IRR. These numbers are sufficiently encouraging for us to carry on. That was based on a CapEx also of $500 million Canadian. Our production profile was based on the first 10 years at 8% discount rate. So we're projecting about 320 million pounds zinc annual production and 140 million pounds lead, which would give us a 2.8-year payback period. Key takeaway, however, is that Point, as it did by the predecessor company, Cominco, which produced for 24 years, closed down in '88. At the time, Cominco, which is precursor to Teck, was producing one of the cleanest zinc concentrates on the planet, and that would be, again, the case today. So Point's located in the territories just north of the Alberta border. Ready access in terms of infrastructure, paved road to the mine site from the Townhay River, and then road and rail to central Canada. When you're considering a development project in the base metal space, infrastructure is always critical. Unlike gold, which you can fly out in remote areas, a base metal mine produces hundreds of thousands of tons of concentrate, so you absolutely need ready access to both rail and or port. So as in the Cominco days, Point has rail access to central Canada, and from Edmonton, you're on the main line, so that would allow us to either export the concentrate to the West Coast for access to Asian markets, or alternatively the East Coast for access to European, North American markets. And that's one of the reasons we acquired the project, because without ready infrastructure, it was a no-go as far as we're concerned. PA indicated the C1 cost of about 67 cents US a pound, which would put Point in the second cost quartile in terms of global production. So the production profile is based on the first 10 years, which include about 39 million tons of our current resource of 50 million tons. Again, keep in mind that this is a PEA level, so the entire resource base, although pit constrained, includes a mixture of indicated and inferred. And the production would peak in year 3 at just over 200,000 tons of concentrate, or alternatively about just over 400 million pounds of zinc. So this profile would actually potentially put Point as a top 10 zinc producer globally, so significant production. But again, the beauty of this project is the quality of the concentrate. If you look at the left-hand side, on the blue side, just comparing Point concentrate quality to the 5 biggest producers on the planet, including Red Dog in Alaska, Rampur Camp in India, the Australian producers, and Antamina in Peru. Major producers have major element contaminants ranging from about 12 to 16%, including silica, iron, lead, and copper. Pine Point comes in at less than 2% total major element contamination. Ditto for trace elements on the right-hand side, including manganese, mercury, cadmium, and arsenic. Pine Point comes in at less than 1,000 ppm total, whereas major global producers range from about 3,500 to 5,500. So Pine Point would be a premium quality, high-grade concentrate running 59% zinc, a very high zinc content, and essentially contaminants less than threshold for smelter penalties. So this product would essentially be marketable globally. In our opinion, all smelters, no smelter will take all of it, because smelters actually make a lot of money from charging penalties, but certainly all smelter would want some of it. So our resource base sits at 50 million tons, including 37.6 in the inferred category, 12.9 in the indicated category. This is all shallow open pit or shallow underground mineralization. All mineralization occurs less than 150 meters depth. So as in Cominco days, mineralization would be stretched over about a 40-kilometer strike length in a series of small open pits. So in a nutshell, we have a project at this point that has potential to be a top 10 global zinc mine, potential to produce an exceptionally high-grade, clean concentrate with favorable initial PEA economics and ready infrastructure in place. So that actually makes Pine Point an exceptional project, because if you consider critical mass of at least 20 million tons of resource, ready infrastructure, and quality of concentrate, Pine Point is certainly the only project in North America that fits those three criteria. And being very bullish on zinc, we believe that the timing to bring this project into production is actually a perfect storm at this point. So going forward from this year, the drilling program in 2021 will carry on to 2022, focus on resource expansion and conversion from inferred to indicated to be able to bring the entire resource package to qualify for feasibility. We will update our PEA in Q1 2022, which will include, again, an update on resource based on $1.30 zinc long term. We're confident at this point that we can run the PEA at a better long-term zinc price. But more importantly, it will include our current hydrogeological work, which has quantified water flow into the system. The project has suffered from a legacy issue, which is prevalent in the market, the perception that Pine Point closed down in '88 because of water infiltration. It's actually a myth, but we had to deal with it. So this year we initiated hydrogeological work. Initial models claim that the mineralization, which is located along the Sulphur Point Formation, which is the light mauve unit, contains most of the mineralization, and the initial hydrogeological models assume a formational aquifer, essentially a Swiss cheese that would have considerable water influx. Our PEA engineers assumed this to be the case and ended up with a $370 million life of mine cost, which I thought personally was outrageous, but the engineers put the onus on us to prove them wrong. So we initiated hydrogeological work in the form of 31 wells, water wells, in 2021 drilled across the property. We published our initial results about 3 weeks ago, which was very favorable, essentially proving that there is no aquifer infiltration. Any water infiltration in the system is limited to faults. That's the first important point. So much easier to grout and control water flow, obviously, in an individual fault than an entire aquifer. But more importantly, the flow data that we obtained from the water wells was modeled in the first cluster in the central portion of the camp called the C1 cluster. And relative to the PEA, we're able to better quantify water influx and reduce it from 735 cubic meters per day to 400. So that's a 46% drop in inflow rates, which will have a very positive impact on life of mine dewatering costs going forward. So the next milestone is the updated PEA, after which we will move on to feasibility in a year's time as we head towards FID anticipated for 2024. Thank you very much.